Hello everybody, this is AK. I'm back. So on screen you see DBS, OCBC and UOB. Overvalued? Sell now? Question mark, exclamation mark. Why question mark and exclamation mark? Because there are some people who believe that they are overvalued. I like to think that they are in the minority, but it could also be because that my channel and my blog they attract people, like-minded people, mostly like-minded people who feel that our local banks are good value for money as investments. So people who leave comments saying that they are overvalued are in the minority, right? It could also be that, right? Who knows, right? For sure. So anyway, there are people who say that the banks, our local banks, are overvalued, and they won't be buying, they won't be touching them with a 5 feet pole. It's okay, all of us have our own opinions, right? As long as we have done our homework and due diligence, and we have good reasons to believe what we believe, then yeah, sure, by all means, I'm not here to tell people what to buy and what is good for our portfolio. We have our own objectives, right? So, well, I'm here to ask the question: are they overvalued? Right? In my opinion, they are not. Right? We are talking about valuation of like what 9 times PE ratio. 9 times PE ratio, and if we look at conventional wisdom, right? We say that anything that is like higher than 12 times or 13 times PE, we think they are a bit expensive, right? But conventional wisdom can be a broad a brush that sweeps everything with a very broad stroke, right? Of course, different sectors will have different standards, right? But just by saying that anything that is more than 13 times PE ratio is expensive, might be a bit too general, right? But if we go by that definition, then DBS, OCBC, and UOB, they are still inexpensive, right? They are definitely not overvalued since the P ratio like less than 10 times, right? And if we look at JP Morgan, for example, I think JP Morgan, the P ratio is closer to 12 times, right? So then some people might say, oh, so JP Morgan is even more overvalued. But some people might say JP Morgan is now fairly valued, right? If we go by that kind of yardstick, then DBS, OCBC, and UOB are actually still not even fairly valued. Not even fairly valued. They are below 10 times PE ratio. And I've said this before in past videos that when Mr. Market was feeling very euphoric about the economy, about the banks, the local banks actually traded at closer to 2 times book value. 2 times book value. So if we look at what they are trading at today, like OCBC is trading at 1.1 times book value, UOB is trading at 1.1 times book value. I think DBS is trading at 1.4 times book value. So is far away, very far away from 2 times book value, right? Still way below book value, way below 2 times book value. Right, and of course, Warren Buffett says before they want to buy when people are feeling fearful, and want to sell when people are feeling greedy. I mean, it's a very easy statement to make, a very simple statement to understand, but not so easy when it comes to execution. So if we use that kind of historical guideline, right, 2 times book value was market euphoria, then that could be a good time to sell. If it should ever happen again, if the banks trade at 2 times book value, then we should definitely think about selling, because there was market euphoria, and of course the prices fell, and we haven't seen those valuation in a long time. Right, that answers a question of when to sell, which some people ask me, when are you going to sell your investments in banks, AK? Well, I say, well, when Mr. Market was feeling euphoric, they were trading at 2 times book value. So that's definitely a price that I'll think about if the time comes to sell my investments, right? So I don't know why people think that DBS, OCBC, and UOB, well, why some people think that they are overvalued. They probably have their own justification. So, I mean, some gurus think the same way too. So, I mean, if you follow those gurus, then you ask them for the reasons, right? I don't know why they think that the banks are overvalued, right? So then if we look at OCBC in particular, some people are still not convinced that OCBC is safe from all the turmoil that is in China, right? Because UOB, UOB, OCBC, because OCBC has such a huge exposure to China, all right? I think like 30%. But like I said in the past video, OCBC, like DBS, they have been very prudent. They could see the problem with the Chinese property sector coming. All right, they expected it to be problematic a few years ago, and they have limited their exposure. All right, so like in OCBC's latest report, they actually said that their non-performing loan ratio has dropped from 1.2% to 1% year on year, right? And that's because they've been very prudent in controlling risk and limiting exposure to Chinese real estate, for example, right? So and OCBC is actually very strong, very safe. Even if something were to something unexpected, unforeseen were to happen that is negative in nature, their CET1 ratio is actually almost 16%. It's at 15.9% now. 15.9%, right? They're very strong. And this is because they have been retaining earnings as well. Like I said, they've only paid out 50% of their earnings as dividends. They retain 50%. So they become stronger over time. And with such a strong CET1 ratio, this ship, OCBC, is unsinkable. It's really unsinkable. But of course, that is also a bugbear because investors, some people who say, and I do agree to a certain extent, that you have so much capital, you have so much excess capital. If you can't put it to work, you can't find some productive work for it. I must say that because sometimes they just put it to work for the sake of putting it to work, and it might not be the best way to use the capital. You should think of returning some of that capital to shareholders as dividends, right? Like what DBS has done, right? Special dividend, right? Pay more dividends to shareholders because there's a lot of capital, right? And if you're sitting on so much excess capital and you're not you cannot find good ways of using it, then it drags down the performance of the bank. And that could be one reason why OCBC hasn't touched $14 a share or $15 a share, because I do think that there is potential for OCBC to trade at much higher price. But anyway, that's just AK talking to himself, right? If AK can do it, so can you. Bye bye.